Hi, everybody. This is Gary Dean, and this is our nightly video report for Monday, September 26, 2016. So we saw some follow-through with the selling that took place on Friday, and basically the euphoria trade after the Fed surprise announcement, which was really no surprise, has been wiped out. And this now, I believe, I'll show you on a different chart, but I think it's the fifth gap up that has failed. And what I mean by failed is it's actually taken out the lows from where it gapped up to. So this is the fractal pattern that I've been following, where I'm looking at something like this type of move where we had a bounce back up and it, came up to these previous highs, which was pretty close to this here. And then from there, we had a drop, another test of the highs, and then from there, we had another big drop. So where you can see we have that wedge line that's right around that 2034, 2035 level, which you may find some buyers that step in there, and then maybe they come up and close this gap. I'm not willing to to stamp any kind of pattern in play, because I know that what's going on with Deutsche Bank, it's really making some people nervous. So that kind of stuff, that if a bank that large gets into some serious trouble, it can have a waterfall effect. Now, I'm not saying that is what's going to happen. I don't really know any of the details behind what's going on. I just know that the stock itself has been clobbered, and there's been talks of them some kind of bailout that got denied, and that's why it got whacked again. So if anything like that happens, then obviously expecting any kind of little bounce would probably be right off the table. Now, what the bulls have to do is probably get it above this 2168 level to get control again, and they really want to hold this support line, which is right around that 2138, 2135, depending on when it gets there. If they lose that, then don't be surprised to see us coming closing some of these gaps in a very, very fast manner. But right now, we have the bearish divergences. So my initial take was, chasing up here was not smart, because there's going to be there's more points to the downside than there was to the upside, even if they were coming up here. So it's so far that's holding true on it. If we start breaking some of these support levels, you're going to see selling picking up real fast, and we're going to be trading somewhere down into this 2060, 2050 area. So that's long term. We still have to kind of wait and see what plays out in the coming days. 60-minute chart, you can see we just passed through the the midline, so there's still plenty of gas in the tank for the bears if they do want to drive this lower. Now, you look at this trend line right here, which I drew, and you can see now. I'm going to zoom in on it, that we're coming pretty close to that right now, and that's very similar to the trend line that I was just showing you. This is just zoomed in from a 60-minute chart. But you can see it fall, depending on when it gets here, it's right around that 2138, 2139 level. And that was the reaction trade that I said once the S&P took out the 2149, I would be expecting a reaction trade to come someplace down into the 2039, possibly even down to the 2031 level, 2131. So we're at these levels where I wouldn't be getting aggressive on the short side. My trade was from up here, and I had my stop that was right above, and it worked out well, because I've just been closing some of that short position on the way, and now I just have I'm going to lower my stop even more. I only have a quarter of a position left, but it worked out well, but the thing is, this is when you want to start kind of scaling out of your short positions, and if it breaks through these support levels, that's when you could just jump on for the ride, because most likely we're coming all the way back down to these levels. And if we break this support, then we're heading down to those targets that I've been talking about, down between the, anywhere from the 2068 down to the 2033. So right now we're in that, let's say, gray area where we could bounce and probably come back up somewhere up into the 2063. This is going to be the battleground right here. The bulls have to get back above this level to get out of the let's say the woods for now. But even if they do that, they're going to be heading, back into the resistance zone, where unless they have volume coming in, I just don't think there's enough shorts to squeeze out of this, because they've already squeezed them. So again, there's still plenty of room to go on the 60-minute to get into the oversold. We don't have any buy signals, but this is another reason why I'm saying, be a little careful jumping on the short side, because this is the 15-minute chart. We are pretty oversold here. You can see the MACD is starting to turn up. We're in the first support level, and we do have bullish divergences. So, again, this is not where I'd be looking to get aggressive on the short side. Oops, sorry about that. Hang on one second. I would actually just be managing my short position and probably put a stop right above the 20. It could be anywhere from, you could just use this moving average here and say 2152. If it breaks above it, then then just use that as your stop. Or if you want to give it a little more room, move it up to the to 2159, which would be probably a better idea, actually. But if we start heading down and we take out this support, then we're going to have, this is the first layer of support, and you can see it's going from here. If we take this out and we break through these support levels, then we're coming down to these lows here. And I don't think anybody was anticipating that. I think a lot of people were looking back up to the 2250, 2300 level, and now we're back down here. And this is what I want to go back to the 60-minute chart, because I know I'd mentioned before that this is the fifth gap up that failed. And if we look here, this is going back to July. So we had one, and you can see that we came back down, and this was the gap up, and we were below it. But I don't even think those are the ones that I was talking about. Here's one right here where we came. Obviously, we took that out. Here's another gap up here. We took it out. Here's another gap up. This failed. This failed. So all of these gap ups, after a big move up, has failed, and you can see it gapped up here. So we're back below this, and I'm not sure why they continue to try this. This roadmap here. It doesn't really make a whole lot of sense. So anyway, we have bullish divergences on the 15-minute chart. You want to keep an eye on that 2139 level. And if it gets below that, then there's going to be a reaction trade down to the 2132. And really the last thing you can see on the 5-minute chart, we have bullish divergences here. So again, it's saying don't get aggressive on the short side. Maybe if you want to be really aggressive, you can try to buy at these levels here, anywhere between the 2139 and the 2132, and just automatically put a stop below the 2120, or just use a stop on if you've got the short up here. Use your stop right from this area here, right around that 2159, and if it gets back up, then you look to reshort it at the 2170. So that's pretty much it right now. I think that there's a lot of things that are pending right now. I know that the debate is tonight, so I think a lot of eyes are going to be on that. And like I said, I wouldn't be too aggressive shorting right here. I think the short trade for this move, what was up here when I suggested it in the trade room, and right now you just want to manage trades and wait for something to set up again. And if we start breaking support, then you can just jump on the bandwagon for the ride down. So with that, I will talk to you guys in the morning, and have a great night.